Welcome to another episode of Map Your Money. I am your host, Arish Narani, wealth advisor and certified financial planner here at Benedetti Gooser and Associates. Who am I joined with today? I'm joined with Jaime Benedetti and Jeff Cohn. Jaime, you want to introduce yourself?
Sure. My name is Jaime Benedetti, or Jaime Benedetti for those of you who speak Spanish. And I'm one of the partners at BGA and Beam, work along with Arish and Jeff.
Yeah, and I'm Jeff Cohn. I'm the Chief Investment Officer and CFA charter holder at BGA and Beam Wealth.
Jaime, it's funny you introduced yourself as Jaime and Jaime. I remember I didn't know it was Jaime at all because I only knew you through work professionally, and everyone here called you Jaime and all clients knew you as Jaime. And then was playing or helping you out with coaching, and everyone there called you Jaime. And I was like, oh, what? His name is Jaime? So it was a funny.
Isn't it funny how that works in the soccer world?
Yeah.
Everyone knows me as Jaime.
There you go. It is funny. It is funny. Well, we had an awesome episode for y'all today talking about Ethereum. This is our cryptocurrency clip. So I know we spent a lot of time talking about Bitcoin and kind of our thesis. Today, we're going to go a little deeper into Ethereum, and really exciting episode. But like always, like to start with something lighter. And the Olympics are coming up here soon, which is really, really exciting. Also 4th of July. So big America time. So it's good time to be American, USA all the way. You guys big fans of the Olympics?
Absolutely.
Yeah, I cheer for America too. Good caller.
That's good to hear. That's good to hear. What's y'all's like favorite event to watch, if y'all watch it all?
Well, for me, a couple of years ago, or I think maybe it was the last Olympics, they added skateboarding, which I thought was a lot of fun.
Oh, they did for Japan, right?
Yeah, in Tokyo, I think so. Yeah, that's a lot of fun. You always have the snowboarding in the Winter Olympics, but I think it's cool to add the skateboarding in the Summer Olympics and let me relive the days when I could fall on the pavement and not be sore the next morning or the next week. How about you, Jaime?
You know the answer to mine. I love Olympic soccer. It's really cool. Olympic soccer is a little different than, if you watch the Euros or the World Cup, because it's typically younger players. I don't know if this has changed, but they used to have a rule where everyone had to be like under 23, and then you had 3 wild card players that could be any age. And so it's like, it's really cool because it's a lot of the like up and coming stars for a lot of countries. I mean, they're all playing professionally, but I love Olympic soccer.
If you're watching the YouTube, so I guess most people are probably listening to this, but you can also watch on YouTube. If we talk about any graphs or anything like that, we'll share them on screen. We'll try to talk through them as well, so you're not missing anything if you're just listening. But good to also jump on YouTube, and you can find us by searching either Benedetti Gooser and Associates or Beam Wealth Advisors. But I've mentioned all this to say I kind of scoffed when you said I really like Olympic soccer, because I'm a huge soccer fan, but I do not watch Olympic soccer. Just because I think all the good young guys that I care about don't play in the Olympics.
Not a true fan.
Really?
Yeah, that's the explanation.
I'm not as hardcore as you.
No, the really good young guys are like both like it's cool when this happens, right? When you have someone who's just like an absolute stud on the international stage and they're under 23, so they don't even count as the wild card on their Olympic team. It's also fun because it's like a different mix. It's not always
for
the
sure.
Same, like someone who is like a powerhouse at the international level. At the Olympic level, you'll see some teams that they just and really like what you're looking at with the Olympic teams is you're looking at like the next World Cup team or 2 World Cups out who's going to be dominant, which is kind of cool too.
I would be interested to see like the US team, but I'm trying to think of like young players. So like I'm thinking of like, this is going way too deep, but there's a super young player on Spain, Lamine Yamal, who's 16, and he's going to be playing in Euros. There's no way he plays in the Olympics too, I wouldn't think. But maybe not. I don't know. So
I think the guys that are less likely to play are the ones that are above 23 and they're and they just don't care.
Yeah, for sure.
But you're right. I think there's definitely the possibility that he doesn't get to play in the Olympics because he's playing in the Euros.
Yeah. Well, interesting. I'm definitely going to be curious on the US now that you kind of mentioned that. But well, Well, sounds good. Hopefully,
I just want to throw in one, Arish. I want to throw in one more shout out for the YouTube channel. And in today's episode, you get a bonus, and that Arish's internet connection is a little slow. So on the YouTube channel, you're going to get to see a lot of awesome frozen faces. So I would highly encourage you to watch just for that reason alone.
Am I actually freezing right now, or is it coming through?
The sound keeps coming in, but every once in a while we get a really funny pose.
Cool.
Well, it's just adding to the entertainment value of this podcast.
I love it. I'll make sure to always be photogenic, so when I freeze, you're getting a good picture.
I know I'm self-conscious now.
Just did a really good one
of this. I don't know.
There you go. Well, let's jump into it and get straight into the meat of the podcast.
Hello, and welcome to Map Your Money, a finance-focused podcast. We exist to simplify the lives of our clients and listeners and help individuals create the roadmap for their financial future. Content is for educational purposes only. Consult a financial advisor or conduct your own due diligence of investing. Calls are pre-screened and the content was pre-recorded.
All right. So like I mentioned, it is a cryptocurrency clip, and we're going to be talking about Ethereum today. So Jaime, I'm just going to give you the floor here in terms of what you want to talk about or how you want to kind of guide this in terms of talking about Ethereum today.
Yeah, sure. So we're really excited about the recent news that spot Ether ETFs have been approved. We did a couple previous podcasts about our thesis around cryptocurrency broadly, and how we were finding a way to invest in it in client portfolios. And it's essentially playing out in Ether now, just like it did in Bitcoin a couple months ago.
Yeah, and I know you mentioned that was our thesis in Bitcoin. I know that was our thesis in Ether as well. And so we haven't seen the full benefit of that yet, have we?
Yeah, I mean, if you look at the discount to NAV of certain Ethereum trusts, right? That like ETHE, for example, from Grayscale, that it was trading at a discount of around 20%, and then this announcement really came out unexpectedly, and that discount basically closed overnight. And so what you saw was ETH. So Ethereum went up, 20% or so on this announcement. Jaime, I don't know if that you can correct my numbers there. The discount for ETHE also closed. And so you had kind of this double whammy on ETHE where the actual price return of that trust over a 2-week period was 70%, even though the discount, only closed by 20 percentage points. So this was really a combination of the discount closing, which we also saw with GBTC, but also just the underlying price of Ethereum also went up because of the expectation that there's going to be a lot of inflows and demand for new Ethereum now that this, spot Ethereum ETF is possible, which is exactly what we saw with Bitcoin as well. So we think, there's been quite a bit of market movement already, but not to speak for you, Jaime, but we think this has some legs too to keep going.
Oh, absolutely. And, what you mentioned is part of the reason we found this so attractive is we're looking at an asset that we feel has really sound structural long-term fundamentals, but is also very volatile, right? And so, we can use that volatility in our favor as it comes to rebalancing. But one of the things that made it so attractive is prior to there being spot ETFs for both Bitcoin and Ethereum, you had these trusts that own the underlying asset trading at such a deep discount to the underlying value of the Bitcoin and the Ether. And so it almost provided us this additional margin of safety, knowing that, hey, the price could drop, but in the long term, if we really do expect spot ETFs to be approved, that gap between the net asset value and the discount is going to eventually close. And as far as, it's played out actually a lot sooner than we expected, especially with the spot Ether ETF.
Yeah, definitely. I know one of you just mentioned that it was kind of a surprise announcement. We saw with Bitcoin's announcement, it was rumor after getting closer. Okay, we might have it. They filed, denied. Okay, this one's closer. Oh, BlackRock just filed. Oh, if BlackRock's filing, we definitely have like a chance of it happening. Can either of y'all speak a little bit more to how surprising this one was?
Yeah, I can definitely chime in on that. I mean, the Bitcoin spot ETF was really exciting because you had kind of these pivotal moments leading up to it, right? Like really what drove it, because you have an SEC that has been very hostile to crypto. And And a lot of times their actions didn't make a lot of sense relative to their mandate to protect investors. And so what you had was a lawsuit where Grayscale effectively sued the SEC, and they were very successful. And so you had kind of these pivotal moments, that being one of them, when the decision in the Grayscale lawsuit came out, where you were just like, hey, the writing's on the wall. It hasn't happened yet. But so what kind of happened, you had really a low point, probably like at the nadir of the FTX debacle, where let's say the Grayscale Bitcoin ETF was, or not ETF, the Grayscale Bitcoin Trust was trading at, like 50% discount to NAV. And it gradually kept creeping up. And every time you had one of these events, you'd see a big bump. You'd see something favorable come up in the Grayscale trial, you see a bump. And then BlackRock announces that they file an application, you saw another big bump. And so leading up to that approval, you could kind of see the writing on the wall, because the SEC started engaging with all of the applicants for spot ETFs, asking them for things, and you could just see activity happening. It became clear that this is likely going to get approved. With the spot Ethereum ETF, it's totally different. We anticipated the same thing happening long term, because it doesn't make sense that they would approve futures-based Ethers ETFs, which are an inferior product, they're more costly, and then not approve a spot product. So it's exactly the same thing that happened with Bitcoin. But the SEC, has taken a very anti-crypto stance. And so they were kind of dragging their feet, and months leading into the deadline for the spot Ether ETF, there hadn't been any activity. And none of the applicants really expected it to get approved, because it hadn't been crickets from the SEC.
Yeah.
And so that was kind of the mood going in, and nobody expected it to get approved.
Interesting. Well, a pleasant surprise. I know that bump on that discount really rewarded us, since we've had that thesis. We were able to benefit on the Bitcoin side, now being able to benefit on the Ethereum side. I know we've kind of mentioned this for Bitcoin, but you want to touch on why we're still bullish or optimistic on the ETF, or Ethereum in general, in terms of now it's easier to invest in, and now we kind of expect some more flows from different firms and from retail investors as well.
Yeah, great question, Arish. So if we look at the flows of Bitcoin, whenever the spot ETF was announced, so looking at year to date, the BlackRock ETF has brought in $17.6 billion. The Fidelity ETF has brought in $9.5 billion. This is all year to date for this year. And then you have, the ARK, $2.6 billion, Bitwise, $2 billion, and then a few other Bitcoin strategies like, let's see, VanEck is on here for about $600 million. So all of these strategies have brought in a lot of money, while Grayscale, on the other hand, has lost 17.8 billion assets year to date. So clearly what you see is there's some winners and losers here, right? There's some people like BlackRock, Fidelity, Bitwise taking share from Grayscale, but also there's just an overall net positive inflow into these assets after that spot Bitcoin ETF was announced. And that's something that I think, we expect to see from Ethereum. We saw the initial price increase, just like we saw in Bitcoin. Things went sideways for a little bit, and then we saw an additional surge in that price as we saw more assets flow into that market. And so I think we would expect to see something similar with Ethereum as well.
Yeah, and to add to that, one other factor that you really can't underestimate is that the political winds in Washington appear to be changing. You had prior to this an SEC that was pretty hostile to crypto. I don't think that the current SEC has really changed their tune, but what's definitely happened is a lot of congressmen and senators have. You had very recently a couple of very high profile crypto bills where a number of Democrats defected and left party lines and voted in line with Republicans. And, really crypto, if there's anything that should be a nonpartisan issue, it's this. And you're starting to see that. You're starting to see some really harsh criticism of the way that the SEC has handled things. And that's part of the reason that the Ethereum ETF approval was out of nowhere. We can only speculate as to what happened, but it's likely for political reasons, as someone very high up in the Democratic Party said, hey, this is a losing issue. And the directive was passed down. I mean, we're speculating, but it's the only thing that really makes sense. And so the fact that in Washington, a lot of politicians are starting to see crypto as something that is not only good for their constituents, but important to a lot of people, I think is a really good thing for crypto broadly, because it's done as well as it has with headwinds, with massive political headwinds. And I think if we can clear the path and start to get some, let's just say, some rational crypto legislation in the US, not only is that good for innovation, good for consumers, but it also, I think, makes crypto more mainstream and makes it more likely that assets flow into these products.
That's super interesting, Jaime. The one thing I was about to ask you, and you kind of cleared it up right before I had the chance to ask, but it's when you said kind of the it being a non-political issue. I was gonna ask which sides, like it was Republican for crypto war, like what side is for what? Because crypto kind of confuses me in terms of how that would align with each party's kind of original thoughts, and you kind of answered it there. But I mean, I agree in terms of it being like a nonpartisan issue, but.
Yeah, and I think if you dig deeper into it, I mean, so like the black and white version is we've had historically Republicans in favor, Democrats against, but I don't think that tells the whole story. I really think within the Democratic Party, you kind of have two factions. You've got the sort of younger part of the Democratic Party that was pro-crypto, but it, is ultimately trying to support the party and has been voting across party lines. And then you had a sort of either older non-tech savvy portion of the party, or the very, very far left of the Democratic Party that have been very anti-crypto. And we can get into some of the conceptual reasons why that is. But what you've had recently is a lot of Democrats kind of defect and be like, hey, this is a nonpartisan issue, and really vote for what they felt is the right thing for their constituents and for U.S. consumers broadly. So part of what accelerated this is Trump trying to make it a political issue. So, whether you love Trump or hate Trump, I think he definitely threw gasoline on this fire, and in an odd way, in some way has made it less political by doing that. Because
what's his stance on crypto?
Well, I mean, Trump, if you go back to his first presidency, I mean, there's lots of sound bites of him saying he doesn't like Bitcoin, he thinks it's a scam. And then he's come around. Now he has Trump NFTs, and he had a dinner for his NFT holders, and he came out and said something to the effect of, if you care about crypto, you better vote for me, because I'll keep Elizabeth Warren and her goons away from your Bitcoin. It's a really funny sound clip. Again, whether you're like pro or anti-Trump is regardless. But I think one of the things that he has done well is sort of recognize when there's an issue that resonates with people and they're not being heard. And he definitely did a 180 on crypto. And I think what that caused a lot of Democrats to do is reevaluate their position, because what's happened with the crypto lobby is you have a group, you have an issue with a group that's very vocal and very well funded. And you within the crypto lobby, you do have some single issue voters. You definitely have an issue that is much, much more appealing to a younger demographic who's probably a little bit disillusioned with both parties. And I think all of those things have kind of culminated in a lot of politicians having to take a step back and reevaluate and say, well, I better start paying attention to this issue, because especially in a close race, I'm not willing to lose an election over it.
Yeah, no, that's a great point. And wanted to kind of go down that rabbit hole. I know it's an election year, so I'm sure it's going to be something that's relevant and what we might hear about. So thanks for kind of elaborating there. But wanted to kind of come back to a point that you made earlier, Jeff, when you were kind of going through the flows with Bitcoin and what we've kind of seen there. You mentioned a lot of the inflows that we saw across many of those different companies. And when we say inflows, a way to think of that is just investment companies or investors purchasing those assets. And so like if there's a lot of inflows, that means a lot of money is going into that asset or that asset class. And so You mentioned I think it was 17 billion of outflows from Grayscale. Can either of y'all,
right.
can you kind of elaborate on why that is? It seems like a high number.
Yeah. Yeah, no, it is a high number. They lost 17 billion, and of course BlackRock gained 17 billion, and you have about 14 billion that entered the industry. Really, so think about how this works, right? If I offer you a quarter, right, and I'm going to hold it in a vault for you, and then sell it to you, and I have this in two different wrappers, right, that I can sell it to you as, and one of those wrappers is going to charge you 25 basis points for me to manage that quarter for you, and the other wrapper is going to charge you 150 basis points to manage that quarter for you. It's the same quarter. It's the same quarter that's in a vault that's stored back there that you were just buying ownership to. It's just the management fee is different. Well, that's what Grayscale did. Grayscale really took a risk by whenever their trust converted into an ETF, they lowered their asset management fee from 2 to 1.5%. So some investors are getting a lower expense fee, but all the other new entrants into this industry, all the BlackRock, the Fidelity, the Bitwise, all of those had expense ratios of around 20 to 25 basis points, right? And so really what investors were faced with was, this is the same underlying asset, Bitcoin, that's managed in about the same way, right? It's in cold storage, it's in a vault, if you want to think about it that way. All the authorized participants and the ETF, creation, redemption process, all those complexities are about the same. You're just paying 130 basis points more a year for the privilege. It really doesn't. It didn't make a lot of sense to us, and we sold our Grayscale and we bought the Bitwise Bitcoin spot ETF, and it didn't make sense to a lot of the other industry participants either.
Yeah, if you look at what Grayscale's doing, it's kind of an interesting, almost business decision for them, right? Because Grayscale had a massive head start. Remember, they started this Bitcoin trust, and you go back a couple of years, there wasn't really another way to buy Bitcoin or some of these other crypto assets inside of an investment vehicle, particularly something like an IRA, right? So they had this massive head start. And they were charging what it would be considered a lot. For an ETF, 2% is massive fee. In an alternative investment, maybe 2% is reasonable. But so now spot Bitcoin ETFs are approved, and you have a fee schedule that was maybe reasonable for an alternative investment, not even close to reasonable for an ETF. So Grayscale's in this position now where they're suddenly competing with BlackRock, Fidelity, all these big players, and they know they're going to see outflows. So the question for them is, do we lower our fee to something comparable to where we're competitive, or do we just keep our fee high and know that we're going to bleed assets, but some of these assets are going to be sticky? And they're going to be sticky either because people will have forgotten about it and not care, or because they have massive gains and they don't want to sell and pay the taxes. And, as much as I don't think it's the right decision for the client from a business perspective, you kind of can't fault them, because if you think about it, if they lower their fee to 25 basis points, which is not even the cheapest of the spot Bitcoin ETFs, so they're going from 200 down to 25, how many years would it take them to recoup if they just kept it at 150 basis points and bled out assets? And that's kind of the decision that they've made. I mean, there's a little more nuance to this. They've started to do some other things to try to rectify that. But that's essentially what's happening. So when you see those Grayscale numbers, what's really happening is people that are invested in this are going, well, now I have choices, and I'm going to move this somewhere else that's much more low cost.
Yeah, and so for some context around those expense ratios, 2% might be okay for an alternative investment, maybe in a mutual fund, but for an ETF, you're looking at, commodity type ETFs or market neutral type ETFs, you're looking at maybe 80 basis points to 120 basis points. Active equity ETFs are around probably 50 to 60. Bond ETFs are around 25, 30. And then index ETFs like, IVV or SPY are like 2 or 3, right? So 150 was quite an ask for Grayscale. And then 2025 was also pretty attractive from some of the other providers, right? So I think there's quite a lot of incentive there for investors to switch.
Yeah, and I think those costs are only going to go down as you see some of these players get scale, because you mentioned the cost to buy the S&P 500 index in iShares is probably 2 or 3 basis points. Well, BlackRock's charging 20, I think, and that they're going to drive that cost down because there are some other complexities to managing Bitcoin that maybe you don't have with an index product, but at the same time, it's one asset and you're just parking it. There's not a lot of management. I mean, this is a commodity. essentially. So I think over time you will see those costs be driven lower and lower.
Yeah, it's not like GLD, right, which owns gold in a vault, where they have to like lease the vault, right?
Yeah. Jaime, that's a super interesting point about Grayscale's like business decision to not bring the fees down because of the assets being sticky, especially pertaining to gains. And so like they definitely, when making that decision, had to anticipate outflows. So I'm curious to know if in their projection they were anticipating more or less than 17 billion and where they're kind of at with that.
You'd have to ask the Grayscale executives that same question. I mean, I can't imagine that they didn't anticipate massive outflows, but but again, if you're charging, I mean, if you think about it, 150 basis points, that is 6 to 8 times as much as your competitors. So what's the ratio of assets I'd have to lose for, to have that break even? I mean, I think they have recognized it. They're trying to do something now where they've created this second product and they're taking a portion of what's in GBTC and moving it in there, and that's at a lower cost. And I mean, but ultimately, from their perspective, they went from a business that was super, super profitable, right? You have clients that have assets, they're very sticky. They can't redeem these assets without taking a, call it a 50% loss if it's trading at a 50% discount to NAV. And we're charging 2% on this, regardless of, of what happens. And so very, very profitable business. And overnight, with the approval of a spot Bitcoin ETF, it becomes commoditized and their revenues drop dramatically. And, that's the benefit to the consumer of having a spot ETF product. And that's really what should have happened, arguably 4 or 5 years ago, because consumers benefit from it. And the cool thing is that now that's happening with Ether. And I would expect a very similar dynamic with ETHE, or the Grayscale Ethereum Trust.
Yeah, no, well, it's super, super interesting. I know we can probably go into all of this and topics and talk for a while, but I want to kind of tie it back before we conclude here. To, I know we were mentioning the spot Ether in ETH and getting invested there. So we know it's approved. Are you able to invest in it yet?
Not yet. And this is a little outside my area of expertise. Jeff may be able to add some color to it, but there's 2 separate filings that the SEC has to approve. Typically, those are done in tandem. And that's what happened with the spot Bitcoin ETF. And so both of those were approved at the same time, and then it was able to trade. Because of the way that this spot ETH ETF got approved, it was basically like nothing. And then all of a sudden there was this mad scramble to get it approved. One of those filings was approved. All the issuers have submitted the other filing, but it may be a month, maybe 2 months before it gets approved. And so essentially they're going to be approved, but they can't trade until the second filing gets approved.
Yeah, I have nothing to add to that, Jaime. Nah, that is outside of my expertise as well.
But that's why, you can see that the discount to NAV on ETHE has closed to about 2 or 3% from, what was it at 30, 25%, because it's a foregone conclusion that this is going to happen. It's just not happening yet. It might be another month or 2.
Yeah.
Yeah. And I think on that point, from an investment perspective, a lot of times with investments, you're waiting. You see something, you have an idea, you think this idea is going to come to fruition. You're not really sure when the catalyst is, or what's going to kind of spark that change for the market to recognize it. But I think a really important lesson for us is that if you're waiting for that moment, you have to have exposure. That there's no trying to time it. There's no trying to get in. When all these requests are coming in, or the SEC just approved this, let me go ahead and buy this Ethereum trust right now. I mean, if you weren't in it, you missed it. And I think it's really good for us to have that patience and make sure we maintain that exposure for when this happened. And that's kind of how the investing goes. If you miss that initial pop and you don't have exposure, then often that opportunity is gone. And so we just want to make sure we're ahead of the next big thing, the next best wave.
Yeah, Jeff, I think that's a really interesting point, because we're not traders. Oftentimes I recognize that this is a newer asset. It's viewed as very speculative, and to some extent it is. But we're looking at this as a good, sound, long-term investment for clients and portfolios. We're not trying to time this thing. We're not trying to, I mean, this is a good point. We had this thesis and we didn't think it was going to play out as quickly as it did. But had we not found a way to get our clients exposure, we would have missed a lot of it. We still think this still has a lot of legs, but we would have missed a lot of sizable gains.
Yeah. And like I said, the ETHE was up, 70% in those 2 weeks, after I think the SEC initially had some requests out to some of the crypto exchanges that was a catalyst for a lot of this, beginning to start. So ETHE was up 70%. Like we mentioned, some of that was part of the discount closing, but another part of that was ETHE, and I mentioned earlier, was it 20% or 40%, was up 32% during that same 2 week period. So, I mean, that's even for crypto, 32% a 2 week period is noticeable.
I feel like I have to put my compliance hat on for just a moment and say this is an incredibly volatile asset. It's not uncommon for this, you could invest in it and it's down 75% a month later. We feel like long term, it's a very, let's just say that there's a tremendous opportunity for wealth appreciation in this asset, but you have to understand that it's incredibly volatile, and that can work in our favor. Because if you have this as part of a portfolio, you rebalance with discipline. When the days when it's up 70%, we trim it and we buy something else that's down. And the days when it's down 75%, we trim something else and we buy more of it. And that over time is how we buy low and sell high. It's not because we know what the market's going to do or we can predict these things. It's just it's an asset that we feel has some really sound underlying fundamentals. And, maybe at some point, Arish, we can talk about that, about why we think that in the long run, this really has tailwinds.
Yeah, no, and that's a great transition to the point I was going to make. I know we have some listeners who aren't clients, but if you're a client at Benedetti Gooser and Associates, what would be, and I know we also have some clients who have specified that they don't want to have cryptocurrency in their portfolios, and so this doesn't pertain to you if you're listening. But if not, what do I guess a bigger bulk of our clients have in terms of their exposure to Ethereum, or what's our kind of target percentage that we want them to be at?
Yeah, so right now we're recommending an overall 2% allocation to crypto assets. We're achieving this through a 1% allocation to Bitcoin and a 1% allocation to Ethereum via the Ethereum Grayscale Trust. We do have, we have some ownership too with some clients that have a Crypto 10 index holding that's ticker BITW. That's also from Bitwise. So this includes Bitcoin and Ethereum. It's about 60% Bitcoin, 30% Ethereum, and then the other 10% is the next 8 largest reputable crypto assets that are a little further behind Bitcoin and Ethereum as far as mainstream acceptance and investment acceptance, but they're kind of next in line if you want to think about them that way. And so, overall, we would say, hey, if you're looking to get a start in crypto assets, you understand that it's volatile, you understand that it's a long-term asset, but you're interested in the wealth building opportunity that we think it has, start with that 2%. There's a lot of cheap options out there that all own the exact same thing. We're happy to help out with that search. But a 2% allocation is just enough to where you're going to notice those big returns, but not too much to where if something goes wrong, you feel the pain in your portfolio. Yeah,
and that's a good point on sort of the allocations. And so just want to kind of bring it back real world if you're listening as a client. So you had a 1% allocation. We had this awesome bump in Ethereum. Maybe that jumped up to 2% or 3% of your overall portfolio. And depending on the gains there, we're capitalizing on that. We're capturing those gains. We're going to take that extra money from that and reinvest it into the remainder of your portfolio. Maybe some areas that haven't done as well, or maybe some areas like the broader market, which has done really well, but not as well comparatively. So still a buying opportunity there, and can bring that back down. And whether the timing on that's always going to be different, but that is kind of the general thesis of rebalancing, going back to Jaime's point, which is so beneficial. And I know I mentioned Benedetti Gooser and Associates, want to address Beam as well. And so if you're a client who's listening at Beam Wealth, this isn't going to just be in your portfolio, but it is something that we have the capability of adding to your portfolio. And if you're interested in learning more or want to start that discussion with your advisor, please bring that up, and please bring that up to us. I know Jaime is more than happy to jump on a call and add his points and his expert opinion there as well.
Yeah, and maybe for some context, I mean, if we're kind of opening up this bag of worms, I think we should say the reason we've included it in some portfolios and not others is just that historically, the clients at Beam were not their previous advisor was not a fan, and we do have to honor his investment philosophy and make those changes slowly because he wasn't a fan, and I think a lot of his clients weren't a fan, and it's a process. I mean, even on the BGA side. This was the smallest position in any portfolio. It's the one that really took the most amount of work, the most amount of hand-holding, the most amount of education from our advisors because they would take big fluctuations, and I think clients often didn't understand it. But in the end, I do think it was worth it because the returns, the returns have really justified all that work. And that's also why we started small and we're very conservative, because the last thing we want is to invest in something where in 5 years we would have made the client a ton of money, but they fire us or they, force us to sell out in 1 year because it's down 50% and they never see any of that money. And so we have to do this in a way that not only gets a client the best return, but does it within a risk tolerance that they're comfortable with. And you have to take into account kind of their behavior because it's their money, it's a client's money.
Yeah, we continue to see headaches from it, if you want to consider this a headache, from all the capital gains and the tax liability that it creates when we rebalance it. But, I think that's a headache that we're happy to accept, huh, Jaime?
I'll take that. It's a good problem to have. And I mean, I do think it speaks to our core values as a firm, because this was something we looked at 3 years ago, and it was a difficult decision. It wasn't by no means easy. I mean, I think it was easy to see that there were a lot of catalysts that were going to drive the price up, but there were a lot of reasons for us not to include it in client portfolios, because no client was ever going to fire us in 3 years for not having Bitcoin. We were very aware that clients might fire us for putting it in their portfolio, even if it made a lot of money over time. That they might not be with us long enough to realize that. And frankly, one of those catalysts was just the possibility of an ETF, because we haven't talked too much about flows, but there's a lot of structural fundamentals that I think as adoption increase are going to drive more flows into both Bitcoin and Ether. One of the smaller ones is the adoption of an ETF, because the minute we knew it'd be a lot easier to wait till there's a spot ETF, and then it'd be easy to buy this for clients. But if we do that, we're going to miss out on some significant price appreciation that's going to happen leading up to it just because an ETF was approved.
Yeah, no, definitely. That's great points there from both of you guys, and definitely agree. And kind of bringing it back to how you're invested, whether you're a client at Beam, BGA, if you're not even a client, just a listener, regardless of where you stand with crypto and if you invested or not, I think ultimately one of the points of this podcast and our stance as a firm is to educate you on what is going on and what we believe the opportunity is. And so whether you're bullish on it, you're bearish on it, or you have no idea, we just encourage you to open that conversation. We love kind of talking about it and think it's something that's important at least to talk about and understand. I know maybe now it's not being talked about as much at your dinner parties as it was a couple of years ago, but I'm sure the talks are going to start again, or if they haven't already. So it's something that I know is a lot of people are curious about and comes up a lot. And so just want to be able to educate our listeners going forward. But Jaime or Jeff, did you guys have anything you wanted to add in terms of Ethereum or our thesis overall, or anything wrapping up this combo?
I actually just have a question for Jeff. As an asset allocator, you're our CIO. You're in charge of ultimately making those allocation decisions, leading our investment committee. And I know that crypto is something that you didn't come into this kind of natively saying, let's add crypto. You looked at it on its merits, listened to the case, and said, okay, this makes sense. But from someone in your position, how do you think that the spot Ether ETF is going to affect allocations? In other words, do you think the typical, whether it's an institutional investor, an advisor, assuming they go over that first hurdle to allocate to crypto, do you think that most of them are going to allocate just to Bitcoin, just to Ethereum, a combination? I mean, what do you think the typical, how do you think this is going to affect the typical crypto allocation?
Yeah, I would say that from questions that I get from like other advisors and clients, a lot of the focus is on Bitcoin only, and the focus really is not on Ethereum. So I feel like Bitcoin is really capturing a lot of the focus on crypto and digital assets, even though the whole ecosystem of crypto and digital assets is much larger than Bitcoin. So I think at first that's definitely what we're seeing. It's going to be interesting how the allocations work, because the way we think about it is it's a risk asset, right? It's correlated to equities usually. And it's certainly very volatile, so it kind of checks those boxes as a risk asset. But it's also somewhat like a commodity, and sometimes it behaves a little different. So some people can kind of slice it into the alternative sleeve of a portfolio, which sometimes is kind of like the miscellaneous and the everything else, everything that's not stocks and bonds. And that's a sleeve that typically gets a smaller portion of the portfolio and maybe is allocated to commodities or real estate or what have you. So it'll be interesting to see if they pull from the equity and stock risk bucket, or if they take from the alternatives kind of diversifying risk bucket that's more real estate and commodities. But I don't really have an answer for that as of right now.
That's a super interesting point. And it'll be interesting to see how that plays out. Because like when we think about now there being a spot ETF for Ethereum, soon to be able to be traded, hopefully, but now approved. You think about other wealth management firms, you think about other individuals, just like we like to diversify in stocks and not have all of our money in one stock or one ETF. The same goes with the asset class of cryptocurrency. And now there's another option with Ethereum. And so I think most people, or a lot of different firms, will look at kind of diversifying it instead of just having Bitcoin. And so it's interesting on where that diversification comes from. And that is yet to be seen, but trying to kind of have an allocation like maybe we have in terms of being allocated 1% to Bitcoin and 1% to Ethereum. But either of y'all have any other points, or should we wrap up our great combo today?
I would just make one last point that has to do with why we see long-term price appreciation. So, at a very basic level, one of the core theses here is that with Bitcoin, there's a finite amount. As more people want to buy Bitcoin, the amount of Bitcoin never increases. And so it drives the price up because more and more people want to buy something that is scarce. With Ethereum, there's ultimately the same dynamic. Now, the underlying mechanics are a little different in that Bitcoin, there's a hard cap. There will only ever be 21 million. With Ethereum, the dynamics are a little different. Ethereum is constantly being created and being destroyed. And there's an algorithm that tries to keep those two in equilibrium. And over the long run, let's just say that it's more or less even. But there could be periods of time where it's slightly inflationary. In other words, there's more Ethereum being created. And there's going to be periods of time where it's slightly deflationary. There's a net amount of Ethereum being destroyed. But ultimately, the dynamics trend in the same direction. That as more people are chasing roughly the same amount of Ether, it's going to drive the price up.
Great points. Well, appreciate both of you guys joining today. Definitely a great discussion. If you listened all the way through, we appreciate you. Now this is a little bit of a longer episode, but appreciate you listening to us nerd out a little bit, getting in a little more into the weeds. But thanks for listening as always. Again, make sure to check out our YouTube page going forward. I know we didn't really go too in the weeds about any graphs, but for future episodes, definitely check out the YouTube and feel free to share this episode. If you do check out our
YouTube page, I want to double down because as much as I made fun of Arish earlier, I've had the lights off and my window open, and during this podcast, it's been getting darker and darker, and now I look like I'm being held hostage somewhere. So another great reason to check out our YouTube page.
I was going to bring it up, but I was just like, I'll let you bring it up.
I thought about
watch.
getting up and turning the light. I thought about turning the light on.
Yeah, you were pot committed, Jaime. You had to stick with it.
I didn't really notice at first, and then I think it was like 5 minutes went by, and I was like, I feel like it's darker there. I think it got something happened, but well, great podcast, y'all. Thanks for listening.
All information provided by this presentation is for educational purposes only and does not constitute investment, legal, or tax advice. It is not an offer to buy or sell any security or any insurance product. This is not an endorsement of any third party or such third parties' views. The information contained herein has been obtained from sources we believe to be reliable and is not guaranteed as to its accuracy or completeness. Whenever there are references to third-party content, this information is intended to provide additional perspective and should not be construed as an endorsement of any services, products, guidance, individuals, or points of view outside of Benedetti Gooser & Associates and Beam Wealth Advisors. All examples are hypothetical and for illustrative purposes only. Benedetti Gooser & Associates and Beam Wealth Advisors do not offer tax or legal advice. Interested parties are strongly encouraged to seek advice from qualified tax and/or legal experts regarding the best options for your particular circumstances.